Every country is in debt. Right now, the United States debt has exceeded $38 trillion, the highest level in its history. The European Union carries around $14 trillion in debt. Japan is close to $9 trillion. Even oil-rich countries like Saudi Arabia are in debt. Major economies like Germany and China are as well. But here's the strange part: if everyone is in debt, then who is the creditor? This is where things get interesting. Because debt isn't just a burden. It's more like the foundation of the modern world. Wars, crises, economic growth, all of it stands on top of this invisible debt system. And when you dig a little deeper, you realize something: the world isn't really in debt to anyone in particular. It's in debt to itself. But that doesn't mean everyone benefits equally. So how did we get here? To understand that, we need to go way back. Long before credit cards and digital payments, this all started with wars. In 1694, England was at war with France and running out of money. The king turned to merchants and asked for loans. In return, he promised, "I will pay you continuous interest from future taxes." To manage this system, the Bank of England was created. This changed everything. Because now, governments could spend money they didn't yet have. And lenders received a promise from the state. A promise that could even be bought and sold. That was the birth of government bonds. Then what happened? France adopted it. The Netherlands improved it. And the United States used it to finance its independence and expansion. Debt was no longer a bad thing. On the contrary, it became a sign of credibility. If a country could borrow, it meant it was strong. Empires once fought for gold. Now they borrow for interest. The battlefield has changed, now the battles are fought on balance sheets. Fast forward to today. Debt has become the world's biggest product. The United States owes $38 trillion. Japan owes over $9 trillion. And globally, debt increases by about $1 trillion every 100 days. Everyone is in debt. Everyone is lending. And in a way, we're all part of this system. So who actually holds the debt? Let's look at the United States. About half of that $38 trillion is owed to investors. And most of those investors are actually American: banks, pension funds, insurance companies, even the central bank. The rest is partly held by foreign countries like Japan and China. But here's the key point: most of America's debt is owed to itself. The government issues bonds. Banks buy them. The central bank buys them back and creates new money. People pay taxes, and that money flows back into the system as interest. So the system keeps circulating within itself. And this isn't just true for the US, it's global. Countries lend to each other. Institutions sit in between. Money flows around. Everyone holds someone else's debt. Think of it like a game. The money everyone holds actually comes from someone else. But for the game to continue, no one can stand up and say, "I'm out." Then there's another layer: the markets. The real power lies with large funds, central banks, and investors. They decide which countries can borrow cheaply and which ones struggle. When confidence disappears, things fall apart quickly. Currencies collapse. Economies shake. Central banks are also key players in this system. Because they don't just manage debt, they create money. In fact, every unit of money in circulation represents debt somewhere else. There is no such thing as debt-free money. This system has been running on trust for decades. People believe governments will keep paying interest. But when that trust breaks, everything changes. We saw it in Greece. We saw it in Argentina. We saw it in Sri Lanka. When debt can't be paid, crises happen. But what's interesting is this: after every crisis, the system starts again. Because in the modern world, debt isn't meant to be paid off, it's meant to be rolled over. Governments don't plan to fully repay their debt. They take new debt to pay off the old. What really matters is interest. And the system is built on that. For example, the United States will never fully repay its debt. Japan doesn't either, it's been rolling it over for years. Investors aren't waiting to get their money back. They are there to keep the system going. Because government bonds are among the safest assets in the world. Here's something even more interesting: if governments actually paid off all their debt, the system would collapse. Because that debt is the foundation of the financial system. So the goal isn't to eliminate debt, it's to keep it sustainable. But there's an important detail here. This system doesn't work equally for everyone. Interest payments usually flow upward to investors. So debt isn't just a transfer between countries, but also between people. That's why as debt increases, inequality increases too. In simple terms, the system works like this. Those who owe pay, and those who hold the debt earn. And in the end, you realize something. There's no single villain in this system. Not China, not the United States, not the IMF. It's all of them, and actually, it's us too. Because the modern financial system has turned debt into money. Governments create it, banks expand it, investors trade it, and we all live inside it. Debt once meant bondage. Today, it means balance. But if that balance ever breaks, we'll remember what debt really is. A promise that cannot be kept forever.